presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to an excellent day at TFNN on an April 22nd, where we have a market that is defying just about all kinds of logic out here. But, of course, we were watching the volume yesterday going into earnings. And we were thinking, well, maybe the volume would be light, maybe 3.2 billion shares on the consolidated tape. Well, what did we get? About 2.6 billion shares. So maybe yesterday was an anathema. But we wanted to see exactly what it was going to do today. Were we going to walk into this show at this time and being 2.3, 2.5 billion shares to start off the show, or would we be under 2 billion shares on the New York Stock Exchange consolidated tape? Well, we're under 2 billion shares, 1.96 billion shares to start the show. We are up 11.5 points at 1883. So what does this tell us? Well, everybody was diving in, told us it was time to buy, and why there are some buyers out there. The volume remains light. Now, if we're set up for what we're thinking, it's probably about a 3.2 billion share day if volume comes in at the end. But it looks like it's actually tapering through starting about noon. So I'm actually saying that we could see 2.8, 2.9 if this continues. Maybe at the end of the day we get some short covering and some volume in. But so far we've got basically empty calories, if you want to think about that. Like eating cotton candy. As soon as you put it in your mouth, it goes away. There just isn't a lot there other than that sicky sweet taste when you clamp down on it. And the question is not if it's going to fail, but at what point, if this volume remains low, will it fail? And we start off the show. As always, you can give me a call at 877-927-6648. That's 877-927-6648. You can email me your questions at path@tfnn.com. But make sure and give me your name and town in the email so we know who you are. Or you can post a message in the den. But it's going to be a very exciting close out here. And then, of course, earnings again tonight and tomorrow and Thursday into Ford on Friday. But we'll be looking at some of these stocks. But other than the fact we've got a lot of M&A up here at the top, which is not uncommon for major tops and crashes, it is what it is. It is a light volume top going into May, and the question is, will they be able to hold this thing up through the end of the month to get some of the fun buying in and push this thing up yet higher as we continue to have a lighter and lighter volume? My hope, it would be that you get a light volume pullback if you wanted to be bearish, and then volume comes in and we drive through the highs to even higher highs. That would tell me that the market was healthy. It was built on a foundation, not of sand, but of concrete pillars, of pilings. But everything out here shows that they keep pushing this market up, and not a lot of people coming up to the counter and buying tickets for this movie. I have a feeling that there's some surveys that I saw out over the weekend that are basically still stating that retail investors, even at these highs, have decided that they were going to stay away. And looking at some of the new numbers on CNBC, why they had basically a brief 10-day period with a lot of people watching CNBC a few weeks ago, it's gone back to its regular, rather anemic level that they've had for several years. Unclear exactly why that would be, but it looks like people got interested when the market was going down and when the market was going up for about a week or two, and turned the TV back to whatever's running on there, Judge Judy or whatever during the day. But very interesting nonetheless. Today in history, in 1970, the Dow Jones Industrial Average dropped by 1.3% to 762.61. And H. Ross Perot, a giant sucking sound, suffers the worst one-day personal investment loss on record. His electronic data systems, also known as EDS, drops from roughly $150 a share to $80 in chaotic over-the-counter trading, a paper loss of $450 million for Mr. Perot. I think he's still alive. Mr. Giant Sucking Sound, all the way to Mexico. Anyway, probably the better days of Saturday Night Live. So I didn't really prepare a lot because I was trying to watch the market today and see if there was anything we could glean out of it. Talking a little bit to our next host on the old IM blower. And congratulations on him on sticking to his guns for short on energy. And like we said, the charts were basically saying all that. We'll see just how well that works. But Andy will be coming up here in a little bit. But, boy, I tell you what, coffee off like a rocket. The Art of the Charts scan did come up with a perfect coffee Gartley out here. And we talked about that, what was it, on Friday or Monday? Friday, I think. This thing setting up. But literally everything you want to see in a great Gartley pattern, other than maybe the retrace higher was a little bit more than you would like to see. This is not a huge volume stock, so I didn't decide to play it. But it had everything that you wanted to see back out here. And mostly it's that last leg down from $8.39 to $6.64. And then, about 4 cents, 8 cents over the D target, but it came right back into where the thing had a sign of strength and headed back up. And of course, we're going to look at commodities, just a taste of it before Andy comes on, and probably the last 5 minutes of the show. And see what else do we have going on out here. I'll just check in the movement out here. It's a little bit. We've got some rockets. And, of course, one of the things I brought up and emailed to Tom O'Brien last night during his show was the IBB. What was really interesting to me was this thing and the possibility for a retracement, but also its ability to come right in to Confluence today. Now, it is not uncommon to see a movement into Confluence just a little over it during the day and then back underneath it for the close. It doesn't look like we're going to have that. But the same thing you wanted to do is have some volume, and we're not getting that. The April 10th day out here where everything pretty much came to hell in a handbasket with 4.6 million shares on the IBB on that huge volume down day. And let's take a little different look at this right here. Maybe I want to go back in. There we go. And, basically the highest volume day in the last 6 months. You had volume the day before, that 4.6 million shares. Then you had almost 7 billion shares the day after that. You get into 4.1, and then even this low at 6.4 billion shares at 207.48 that happened on the 15th. Pretty good indication that you're probably going to get that thing challenged. And you've got a nice resistance level out here. But the question would be, if this thing would close back below 233.43, would we be starting the next, probably a little lower or longer ABC down? And I think I think you can make a case for that. But it is a very interesting chart out here. Let me see if I can clean this up a little. There it goes. And that may give you just a little bit more, but you don't have anything out here that looks that great. Now, when we get to highs in a marketplace, you always hear a lot of M&A activities. The reason that you get that is a lot of people want to use their stock, and they know that their stock probably not going to hold that price. So they'll go out there, but it makes everybody on the other side feel really good because they get this deal. Supposedly this deal's worth $100 billion or $50 billion or $5 billion in stock. And, of course, the part of that is that it's probably at highs, so that's it looks a lot sweeter than it is. Normally, those people will have some restriction on how many shares of stock that they can actually sell when their company gets bought out. Some of those deals are all cash, but most of these deals, when you get to these highs, you're using a currency that is incredibly inflated, a la Facebook or somebody else like that, or Twitter or something that has volume that isn't that good. But certainly what you would like to see is some kind of huge volume in here in the IBB, and you're not getting that. Says, Dave, please explain how a hedge fund and a company can team up to buy a company a la Allergen. Well, there's not a great deal to it. As long as you do the filings and you don't, and how is it legal for the hedge fund to buy options beforehand? It's perfectly legal. And there's no law against it. You can buy whatever you want. As long as you're below a certain percentage already in that company, you don't have to file. And the worst part of it is that you do have to file. So what we did find out in this deal with Ackman and them trying to put these two big behemoth biotechs together was that he had about a 10-day window where he'd gone over the 5% and started buying stock. And at that point, anywhere between 5 and 10%, you're going to have to file on every time you buy and sell, not within 30 days or 15 days, but literally by the close of day that week. And there's nothing to it as long as you follow the rules besides that. But normally when you see people make big moves like we saw Carl Icahn do in Netflix, where he wanted to get below that 5% level, so the earliest that traders like us could know about it was 30 days. He basically sold it all off on that first huge move down in the 300s in Netflix that we caught. And it is more of an issue now that something like this goes along. But as long as you are not colluding with the company to manufacture the price of the stock, and that's what they have to get to. And we'll talk more about this when we come back. But basically, the only thing they can do is if you're colluding to move the price of the stock you're buying. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, it's all about earnings, and now, and probably for the rest of the week now, it's all about options rollover being done. Just about this time, probably normally about 2 o'clock, all the new positions have been put on for options rollover, and you get back to a rather normal market. Sometimes this actually goes all the way through Tuesday. I don't see a lot of change. I think the tapering of the volume down is telling me that we are seeing probably a big change, and that options rollover activity is pretty much over. Normally by Wednesday you get a real movement in the market that gives you a little bit more a solid footing on what's going on in the future. When we were talking at the end of the last segment, the question was how can a hedge fund and company team up to buy a company a la Allergen? And there's nothing illegal about it. And many times there will be secret filings between people like the hedge fund and the company that says exactly what they're going to do and what they plan on doing. And as long as it's in the best interest of the shareholders, not the shorts, the SEC will stand away. There have been a couple of times when these documents have leaked early out of the SEC. People have taken money to let others know, and that's pretty much the way I know that a lot of these things are actually taken care of with the SEC long before we ever hear about them in the news. But yesterday they started, the news came out kind of early from David Faber at CNBC. And my guess is that one of those papers did kind of find its way to finding its way out, and that's why this thing was rushed out the door yesterday for the news. I don't think that they were planning on doing it yesterday. It just happened to happen. Where would confluence be on LVS? Take a quick look at that. Well, not a really good confluence level available on it. Kind of big and fat levels. It's basically hitting the level on the way back up today, but volume is increasing, so I'm going to say that's a rather minor level and not over a lot of time. So probably not a good one. Let's take a quick look at WIN. And see, WIN has a much better confluence level here, very narrow between 212 and 214, and we're just back up to that level right now. So, yeah, it's you've got basically, depending on which ones you want to look at, but the one I'm going to be looking at are the longer-term ones that come out of the move from January 27th at 189, and so that's 189, and the next move was the November 20th low at 157. If you put those two together, you're going to get that one that comes at 212 and 214, and that's right back to where we're at now for those particular lows and support levels. That we did break through that one on the way down, and even on the minor levels, it's right here at 217 to 215. But the one that you should use is the longer term one. That would be 212 to 214. We busted through that and want to see is that challenged a couple times down to 207 and 206 on about 2.4 million shares. And you broke through this thing with 2 million shares, 1.7. There it is, 3.8 million shares, and it blew through that confluence level. So now that confluence level is resistance on the way up, and you'd like to see some volume. That we have 1.2 million shares, not a real vote of confidence, and they report, I think, after the bell today, isn't it? Hang on a second real quick. Calendar, U.S. earnings, I think, WYNN. I think I actually have it on my list. Yeah, after the bell tonight on WIN. Yeah. Right. WIN. Why is it not in here? WYNN. Okay. Oh, April 28th on WIN. Okay. Well, that must have been changed. Anyway, we'll be back in a minute. We'll get into some more charts out here, some earnings. But it looks like WIN's 28th. It must have changed. We'll see you in just a moment.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Well, since Netflix did so well, we've got a lot of others that are moving. We'll look at Netflix here in a moment. But interesting to see Tesla back from the grave out here. I think we had a caller, I don't know, what was it, 3-4 days ago, that was asking where I would short this. And I said, well, you really need a decent bounce. And on retracements, that would probably be, you want some kind of decent retracement out here. 224.66 would be the 50% retracement. This thing, always highly volatile. I can't remember what they were asking, but I thought maybe if it could get somewhere between that 224 to 234, and the volume really came in light, is what you'd want to look for. And, you had, on the 4th of April, had some fairly heavy volume day down, and you've got 7.3 million shares now going into that 11.3 million shares. So we're kind of in that range out here. I like to see at least a 50% on something that is as volatile as Tesla, but maybe you get 224 out there. If the volume really died here or we got a major reversal in the markets, probably be very interesting. NFLX, the same thing. I think we had a question in this. This one, probably a similar thing. We're up to a 50% retracement on Netflix. Now, if we go back to 1999, 2000, 2001, in the heavy move down in the NASDAQ, this is kind of what charts look like intraday. Just imagine putting this kind of price movement into one day, and it wouldn't really be that uncommon to see everything that we've seen over the last 30, 45 days in Netflix all happen in one day in that price range, or at least a percentage range, if not for the price. But you have a huge gap up. That gap is on 7 million shares so far today. You're getting into the heavy volume day down of the 24th, which was 6 million shares. Basic huge gap up. Normally what it takes is about 3 days out here to get those that were on the wrong side of the short. If the volume, and you basically get up to 385, and this thing goes very, very light volume across for the next few days, you can see this kind of act like ISRG, which had that huge pop on coming out of finding that their product was FDA approved. So you had a huge move up. And you could probably see the same kind of thing here in Intuitive Surgical. So I'd probably give it 3 days and see what happens. My guess is that a lot of people, since earnings were coming out on Netflix, that you're probably not going to see anything like the move, what was about a $50 move back up from that gap up, maybe $60 move. Probably going to see something a little muted, but you can see something like this where maybe it was $3, $5 higher over the next 3 days, and then rolls over, comes back and fills this entire gap back up on Netflix. So keep an eye on that. But the key is going to be little or no movement over the next few days in Netflix. So just keep an eye on it. These are not incredible patterns in the way that you think that they are. In a bear market, which I think you can probably almost say NASDAQ is very bearish in tone, problematic. So we've got that. We've got Netflix. I'm trying to remember what we have after the bell tonight. Let me go ahead and pull my list up. Okay, so Monday, what do we have here? Okay. Tuesday, okay. Okay, after the bell, we have CREE, C-R-E-E. Let's take a quick look at that. Nice little move back up in here. This thing has been making asymmetrical triangles, so there's not a whole lot you can do out here. It's got a lower volume low compared to the February 5th low that had 2.8 million shares. On April 15th, you had 2.2 million shares. Now this thing's starting to move back up. But probably more of a move out here than justified going into earnings. But we'll have to see what they have to say. Price is really falling on LED bulbs, which I brought up yesterday. So I don't know if the future is that bright for CREE. Illumina, Intuitive Surgical, after the bell tonight. We already looked at that. Juniper Networks, JNPR, which I'm pretty sure after the bell. So you've got some nice movements out here. But Juniper really not giving any big signal. A lot of these things do just look like continuations in ABC downs, and a lot of them are somewhere between the 40 and 60% move last night. I think we're probably going to have a little bit more of them between the 50 and 60% move last night. LXK. Of course, this had earnings today. We were short this in the newsletter. Didn't really make any money. Didn't lose any money. But just kind of got wangled out of it. And sometimes you have to wait till earnings for the truth to come out. You could really see that they were holding the stock up for a while. And it may be one of these markets where the only time that you're going to get the truth in the market is when they actually come out with the earnings. HPQ, I want to look at that. Let's see how that's doing compared to... doesn't seem to be having a big effect on it. Certainly not a lot of volume out here. But when we look at LXK. This thing had been screaming no volume from the breakout of $41.45. That we're right back at that level now is no big surprise to me. Lexmark, of course, the maker of those printers on the stuff. Yeah, Dave, is SPY headed back to the high? We have sliced through 0.618. I don't know if we sliced through it, but certainly the SPYs are up and nice. We're up 12 points on the S&P cash. But, you know, what is we got? 240, and we've got 2.1 billion shares. Frankly, I'd be staying short and widening my stops here. If there was any volume in this market, if we were doing, let's say, 2.8 billion shares right now, I'd fold my hands and run. But I've always been rewarded holding fast and not thinking too much at these highs, as long as volume is low and those highs are being challenged with lighter volume. Now, sometimes the volume does come in, but I see no indication of that. We've had 3 days. We've had lots of earnings. Market really acts like it's set up for some kind of huge, massive disappointment that I'm not aware of. I thought it would be over the weekend, would be Russia invading the Ukraine, and maybe that's still going to happen. Maybe I'm just not aware of it. I thought that if they were going to do something, they'd certainly do it over the weekend. In retrospect, probably not a smart idea, as we were going to have all those moons still fairly full. They probably would go in at night and under the cover of no full moon. But there's something going on out here, and that volume is not just kind of whispering out here. This is the kind of signal that this is the kind of Roman candle that a blind man could see with this kind of low volume. 2.16 billion shares as we speak, and up 12 points. So what I can tell you, though, is that if we do disappoint, I am not going to be surprised to see a 50 or 60 point S&P down day all at once, because this is exactly how you have them set up. Now, I can't tell you that for a fact it will happen, but I can say that you're probably, if you wake up with 5 point higher S&P, that's maybe a 80% chance. You might have a 20% chance of walking in and seeing the S&P futures down 40 or 50. Any time you see the kind of disparity in volume that we see as today. So that will be it. Again, you can give me a call at 877-927-6648, or you can email me at path@tfnn.com. We'd been talking about crude and crude market having kind of an issue that looked like it was close to topping out, and certainly we're off $2.24. Interestingly enough, the ETFs not really reflecting a whole lot out here, and it may be part of the market. I would have thought that I would have seen at least some kind of weakness in the OIH, and certainly we have light volume today, 1.8 million shares. You needed about 8.2 to get through the November 5th lows out here. So we are setting up a market that could move very quickly. On the OIH, it does have a very good looking confluence level, and that's going to take you right into $48.87 to basically $49.09. So there are some, if it drops, it would drop about $3 on the OIH. Let's take a look at the USO and see if we have any volume in that. I don't think there's a great deal anything else. It also has a great looking confluence level back in here, and it actually is falling today. Of course, it's a lot more aligned with crude, but this says that you should see this thing come back to about $36 before you see any kind of decent support in this market. So let's keep an eye on those. We got Andy coming up here in the break after the end of this show. I did want to get into commodities just because we saw such a huge move in coffee, 7.6% today. And let's see what we have here. I can actually find it in all this stuff. Coffee up $15. That's amazing. 7.63%. Anyway, we were talking about how the art of the charts Gartley scan picked up a very interesting Gartley pattern, and I really liked the this particular pattern. Had just about everything out here that you would look for. One thing that we're not seeing is a lot of volume in this move, and I think Andy said he's looking for coffee to pull back here, but I think if you get a 7.6% move in coffee, I wonder if Andy's not thinking a little short here. But certainly when we look at some of these charts, perfect Gartley pattern if you want to look up JVA, starting with the X points out here on March 3rd, going up to the A points on March 18th. Starts it, and you can kind of put it back together on that side. But just a beautiful Gartley-looking pattern out here. But also what you have is this thing came within about 8 cents of the D-target projection, and it's come back up. It'd be a nice little trade out here if you sold at the highs today. But what you wanted to see is some kind of volume coming in, and you're really not seeing that. So if we wanted to look through more stocks and more charts in ETFs in coffee, I'm wondering how close we'd get to the kind of shakeout on the upside that basically has run everybody out of the market. But I'd almost be looking at that as the move in coffee out here today. I don't even know the reason for the move in coffee, but certainly, interestingly enough, I'm sure Andy will talk about it. But he'll be back. He'll be here in just a few minutes. So I'm sure he'll want to talk about that. What else do we have going on? But beautiful Gartley pattern. No volume 3 days after the move in the Gartley. Normally what I do is take my money here if you didn't see volume within 3 days of the low. You'd love to see at least somebody starting to step in. This one's also a fairly low volume stock, which is the reason I didn't actually take the trade. Just a little bit too low for me, but a excellent example and a teachable moment in what you're looking for, because that's just about perfect. This thing came right back into the sign of strength that was on 314, where you had 2.8 million shares. It kind of hit the bottom of that for several days and moved back up. Maybe you'll get some volume out of that before the end of the day, but always an interesting move out here. Crude off $2. What else do we have? Gold off $5. So not a whole lot into this marketplace. And, of course, lots of earnings tonight. We wanted to get back to a few of those. Okay, so we looked at Cree, we looked at Illumina, we looked at Lexmark, Skyworks Solutions, SWKS. This may tell us a little bit about what Apple is looking at. This thing actually started moving back up after getting walloped by a lot of the stuff, the movement over the last year and a half with Apple after it rolled off its highs. When we come back, we'll look at this retrace, but this thing's right at resistance. SWKS, of course, they make parts for smarty phones. We'll be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, yeah, we got Andy coming up in just a minute. And, of course, he'll be telling us why coffee ran 7% today and whether or not that is the blowout high on coffee or if we need to wait a day or two and that's it. But I don't know why coffee ran like it did. But I'm sure, certainly he will tell us in just a few moments. Marie from Pennsylvania called in. Unfortunately, for some reason, this thing didn't blink and let me know that we had a phone call. So I missed it. I apologize, Marie. She was looking at Maxwell, and yeah, what can you say? The thing's back over the high volume high. And it doesn't have a lot of volume. You needed 6.7 million shares or probably a few more times, at least some good sign of strength. And 1.7 million shares probably not going to do it for me, thinking that this thing's going to hold the high. But kind of like the whole market. In fact, we've got just a couple of minutes left in the show. So what, 1 hour, 5 minutes left with 2.2 billion shares on the consolidated tape. Volume actually has... maybe it's going the other way. Maybe it's like driving a car in reverse, watching that odometer move backwards. It is different. But anyway, we'll take a look at that. VMware is also reporting after the bell. VWM? No, MW. Yeah, VMW. VMware. A lot of these things are all set up with ABC, so right at resistance levels, and I guess they're not going to make it easy for us to get into these things pre-earnings. But this thing's, of course, probably right at 50% retracement, isn't it, from this move? They're such small moves that you're not getting a lot out of it. So what do we get here? 60%, a little more than I thought. Of course, that retraced off of that today. So we are seeing some volume out here that is problematic. And that is, you had some days down here with 3.5 million shares on the 4th. You had 2.5 million shares, which you're going into from the 10th. So similar volume out here. But you could probably say that 108 is probably some level of resistance out here. The question is just how hard is all the problems with the NSA snooping on everything going to hurt these companies that are in this router internet space like Cisco and VMware. I suspect a lot of the weakness that we've seen in a lot of those companies is directly attributable to not having a lot of foreign sales, and it is continuing today. So, what can you say? But this thing, not a bad-looking ABC down, especially with the kind of volume we have here today. Of course, that is based on earnings after the bell, and a lot can change depending on what volume did for them. I like their company, and I would love to see this thing back in the $80 range, where we could have another shot at it. $80, 112 would not be bad. It got some great technology that I love. So we'll continue on that. Okay. Yum Brands. I bet they were out this morning, weren't they? They're always one of those companies that comes out in the morning. Maybe not. Calendars. Yes, earnings. Yum. Okay, they say today. And Yum Brands. After the close, I thought that was a morning stock. Anyway, we're going to see that. This thing's right at highs, so we want to watch that. We've got Andy Heck coming up. And, of course, as always, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.